What's up, guys, and thanks for tuning back into Token Metrics TV. This is a highly anticipated video. This is a video or a concept rather, that I get a ton of questions on all the time: margin pressure levels. These margin pressure levels are what you're looking at on this chart right here. And you might be wondering, what are margin pressure levels? Well, for one, they are key points of support and resistance. Now, support and resistance, there's several ways or many ways to draw support and resistance. A lot of people like to use Fibonacci levels. A lot of people like to draw trend lines. I'm a big fan of trend lines. But as far as horizontal support and resistance goes, a lot of people depend on historical or structural support and resistance. They'll draw these lines here, right, based off of a low or a high, right? And they'll look at previous support as future support or even future resistance. And while that concept can be very helpful, what about all the levels in between? And how would we even populate levels that might be hidden? Or if we're in a bull market, what about all of the resistance levels where we don't have historical data to provide us with structural support and resistance levels? So what we can do is we can populate support and resistance levels, very strong support and resistance levels, by predicting the behavior of leveraged traders. Now, cryptocurrency is a highly leveraged market. If you don't understand leveraged trading, I do recommend you maybe read through a couple articles on leveraged trading on maybe Investopedia, or just look up what leveraged trading is. Essentially, you're buying on margin, or you're borrowing capital from whatever exchange you're at to trade with, right? So let's just say, for example, you have $1,000 on Kraken or Binance US, or really any exchange that offers leverage trading, right? Now, if you were buying in the spot market, you could buy $1,000 worth of Bitcoin. But if you wanted to leverage your capital, lever up, and use, let's say, 5x leverage, the exchange, when you use 5x leverage, is going to lend you $4,000, right? So now you have $5,000 to buy Bitcoin with. And we're just using Bitcoin as an example here because you're using 5x leverage. However, if that trade, right, if that $5,000 worth of Bitcoin you bought drops by $1,000, because you only really have 1,000 of your own dollars in the exchange, if that trade or the value of that $5,000 drops by your original $1,000, you get liquidated. That means you lose everything. You lose the full $1,000, right? So it's a higher risk, higher reward tool for trading. So in that example of Bitcoin dropping, the value of the Bitcoin that you've purchased for $5,000 dropping to $4,000. That's a 20% move against you on 5x leverage. The point at which the exchange sells your trade or liquidates your trade is called your liquidation point, right? And again, if none of this is making sense, this is your first introduction to leverage trading, I do recommend you go and research leverage trading a little bit so that you understand how it works. But we can populate support and resistance levels based on knowing where leveraged traders are going to want to place their liquidation points, right? Now, usually traders are going to want to place their liquidation points above key support and resistance. And we just talked about how many people use local highs and local lows as key support and resistance. So if you were going long on Bitcoin now on leverage, right? Bitcoin's currently trading at $32,400 or so. If you wanted to enter a long position, that means you're betting on the price of Bitcoin going up. You wanted to enter a leveraged long position, you would want to protect your liquidation point, or you would want Bitcoin to be able to fall all the way down to $28,805 or so before you get liquidated. Why? Because that was our previous low. And that's going to act as pretty strong support, right? If Bitcoin starts to crash down, there's a pretty good chance that it could catch around this area before heading back up, and you don't get liquidated from your trade. The exchange does not sell or liquidate your trade and make you, lose all your funds. Okay. So, based off of this level and using a little bit of math, understanding how leverage trading and liquidations work, we can populate levels, support and resistance levels, that are going to be centered around a large amount of leveraged trading, right? So currently, we're looking at the 2x short level, this big red dashed line. And this is the level that I've talked about in a lot of previous videos. And it's an incredibly important support level for Bitcoin. What makes it such an incredibly important support level? Well, for one, we can actually see that this is where Bitcoin has largely been holding support since the big drop, right? This is the 50% retracement line from Bitcoin's all-time high, or the 2x short level. This is the point at which leveraged traders can no longer keep their liquidation point above Bitcoin's all-time high and trade on 2x short leverage, right? So leveraged traders who want to short Bitcoin or bet on Bitcoin's price decreasing, they are going to want to protect their liquidation point by keeping it above the all-time high. Why? Because if the trade goes against them, and Bitcoin actually goes up rather than down, there's a good chance that we could test our all-time high and then come back down lower, right? This point, our previous all-time high, should act as resistance, right? As should our local low. Our local low is 28.0805. This local low, as I mentioned before, should act as support. So these levels are simply the corresponding leverage levels that match up with the point at which you can no longer protect your liquidation point by the all-time high or local high in terms of shorting the market, and the local low support level in terms of going long on the market. We also have a third set of levels, and these are the short levels that are based off of this local high for Bitcoin, right? So we've got our low levels in white here. These white lines are our short levels, margin pressure levels for Bitcoin off of its all-time high. The red levels are the short levels based off of this local high. And then the green levels are simply our long levels based off of our local low. Now, we can actually use these levels to trade or invest, whatever you want to do, entries and exit points. But we can look for points in which there are confluence or overlapping or clustering of these levels. So we know that we have our 10x long level. That is a very strong level because that is 10x leverage. That's a lot of capital amplification around this level, acting as support. We also have our 2x short level. So we know that in this range, if Bitcoin's price is approaching from the top, we know that there's very, very strong support and likely to be some sort of a bounce, whether in the short term or the long term. This is very strong support. Now, if the price had already dropped and closed a lot of candles down here and maybe consolidated, and we were coming back up to this level, we would expect some sort of resistance, right? Why is that? Because as the price is dropping and crossing this level from above, as we cross from above, this is the point at which the shorts dry up. That means you can no longer short Bitcoin and protect your liquidation point. So that means there's shorts leaving the market, right? The short pressure is drying up here. Not only that, that's going to cause, right, as price moves down, that's going to cause upward pressure because we're relieving the short pressure. This is going to cause upward pressure on the price. And then as we dip past the 10x long level, people feel comfortable going long on 10x leverage because once the price is below this 10x level here, right, they can protect their liquidation point against the all-time low, or not the all-time low, but the local low. They can now keep their liquidation point down here, which is much safer than having your liquidation point above local support, right? So that's going to be another factor driving the price of Bitcoin back up as we cross down below this level. That's why it's a level which is very likely to see some sort of support or bounce or reversal. Is it guaranteed? Of course not. But we don't need a 100% accuracy to be profitable while we trade or invest. All right. So one level that I do want to draw your attention to is the crossroads of the 3x short level, the 3x long level, and our downtrend retest line. So Bitcoin crashed, and we've created this downtrend line that we ultimately very likely need to retest at some point, right? It means Bitcoin's price probably needs to come up here and test this at some point sooner or later, whether it does it down here or we extend this line and it comes and tests down there. Now, we have a perfect overlapping or perfect confluence between, you can barely even see it on the screen, but there is both a white line and a green line, the 3x short and the 3x long. This level, which also happens to be at $43,000, we have very strong previous local support, future resistance at $43,000. All this to say is $43,000 is going to be a very difficult place for Bitcoin to break through. Now, I'm bullish on the market. All right, I'm bullish on Bitcoin potentially going back into a bull market. However, I do expect some sort of short-term resistance at $43,000. Maybe we go up to $43,000. Maybe we break through it a little bit, but I don't think we will sustain it for very long before going back down because the shorts will come in at a 3x multiple, and the longs will go away. The 3x longs will dry up, which will ultimately, in my opinion, make Bitcoin come back down. How far down? I'm not sure, but probably at least to this region. So keep that in mind. When and if Bitcoin goes back up to 43,000, unless we've made new local lows or local highs, or local lows rather, I would expect very heavy resistance at $43,000 for this reason. All right, guys, so that concludes the YouTube portion of this show. We're going to continue the conversation around margin pressure levels on Token Metrics TV. So if you're a Token Metrics customer or Token Metrics subscriber, head over to Token Metrics TV, and we're going to continue to talk about margin pressure levels on both Ethereum and Helium Network token.